There's a stack of paper in your wallet right now that everyone treats like it's worth something, and there's a heavy yellow metal sitting in a vault in Kentucky that most people have never even seen. Here's the uncomfortable question nobody asks. If the government stopped telling you that paper was valuable, would it still be worth anything at all? Gold never asked for permission. Paper money did. I'm Marcus Cole, and today we're going to break down something most people think they understand, but almost nobody actually does. Money. Not how to make it, what it actually is. Because once you understand gold, you stop seeing dollars as money and you start seeing them for what they really are, a promise. And promises can be broken. Stick with me, because by the end of this, you'll never look at your paycheck the same way again. Let's go back before dollars ruled the world, before Wall Street, before the Federal Reserve. For thousands of years, across almost every civilization on Earth, one thing kept showing up as money: gold. Not silver, not seashells, not paper, gold. Why? Because gold has something almost nothing else on the planet has. You can't print more of it. You can't fake it easily. It doesn't rot, rust, or disappear. A gold coin buried for 2,000 years comes out of the ground looking almost exactly the way it went in. Try that with a $100 bill. Gold is scarce. Gold is durable. Gold is universally wanted. That's not an accident. That's the actual definition of sound money. And here's the twist most people miss. The dollar in your pocket was never supposed to replace gold. It was supposed to represent it. Here's where it gets interesting. For most of American history, if you had a dollar bill, you technically had a claim on real gold sitting in a vault. That's why it's called a gold standard. The government held the gold, you held the paper, and that paper was just a receipt. Picture it like a parking ticket for your car. The ticket isn't valuable by itself. It's valuable because it represents something real parked safely somewhere else. For decades, the American dollar worked exactly like that. Then, in 1971, everything changed. President Nixon walked in front of the American people and made an announcement that quietly reshaped the entire global economy. The United States was ending the dollar's connection to gold. Just like that, the receipt number longer represented anything physical. It became valuable simply because the government said it was. Economists call this fiat currency. Fiat is a fancy word for one simple idea: money because we say so. No gold backing, no silver backing, just trust. Trust in the government, trust in the system, trust that everyone else will keep accepting it too. And that's the part that should make you a little uncomfortable, because trust, unlike gold, can be printed away. Here's a number that puts this in perspective. Since 1971, the US dollar has reportedly lost more than 85% of its purchasing power. That candy bar your grandfather bought for a nickel? It's not nostalgia that made it cost $2 now. It's dilution. Every time more dollars get printed, the ones already in your pocket quietly become worth a little less. Gold doesn't work that way. Nobody can walk into a mountain and mine an extra $1 trillion worth of gold overnight. That scarcity is exactly why, for thousands of years, humans kept coming back to it, from ancient Egypt to the Roman Empire to modern central banks in Los Angeles boardrooms making multi-billion-dollar decisions today. Now, you might be thinking, okay, cool history lesson, but why does this actually matter to me? Because the smartest investors in the world have never stopped paying attention to gold. Legendary investor Warren Buffett has famously criticized gold for producing no income on its own. No dividends, no cash flow, just a shiny rock sitting in a vault. But here's the twist. Even Buffett's own company has, at times, reportedly held gold-related investments when uncertainty in the market got high enough. And billionaire investor Ray Dalio has repeatedly said something that should stop you in your tracks. That throughout history, when governments print excessive amounts of money, the value of that money eventually collapses. And gold has consistently been one of the few assets that survives the fall. Two of the smartest financial minds alive. Different opinions on gold as an investment, but both agreeing on one dangerous truth: paper money is fragile. Let's make this real. Imagine two families, one in Ohio in 1971, right before the gold standard ended. One in that exact same house today. Same house, same neighborhood, but everything else? Groceries, gas, rent, tuition, dramatically more expensive, even after accounting for wage growth. The house didn't get more valuable because it's better built. It got more expensive because the dollars measuring its price became weaker. Meanwhile, an ounce of gold in 1971 was priced at around $35. Today, that same ounce trades for a figure that's more than 100 times higher. That's not gold suddenly becoming worth more. That's the measuring stick, the dollar, shrinking underneath it. This is the part most people never connect. Gold isn't rising, money is falling. And once you see it that way, you can't unsee it. Here's something most people don't know. Central banks around the world, the same institutions that control national currencies, have reportedly been buying record amounts of gold in recent years. Not paper assets, not stocks, physical gold, sitting in vaults. Why would the people who literally print money be stockpiling something they can't print? Because they understand the secret gold has always represented. When trust in a currency weakens, gold becomes the seatbelt. It's not there for the smooth ride, it's there for the crash. So here's the real lesson hiding underneath all of this. Money isn't paper. Money isn't even the numbers on your banking app. Money is trust, agreement, and scarcity, wrapped into something people are willing to exchange for their time, their labor, their life energy. Gold reminds us of a rule most people forget. Anything that can be created infinitely, out of thin air, eventually becomes worth less. And anything that stays scarce, no matter how the world changes around it, tends to hold its value when everything else is falling apart. That's not a rule about metal. That's a rule about money itself. And it's a rule that's played out from ancient Rome to modern-day New York over and over again throughout human history. Understanding gold isn't about becoming a gold investor. It's about finally seeing money clearly, seeing what backs it, what threatens it, and why the wealthiest people and the most powerful institutions on Earth still keep coming back to a shiny, heavy metal that refuses to lose its meaning. Because at the end of the day, paper promises can be printed endlessly. Gold never makes that mistake. If this changed the way you think about money, even a little, that's exactly why this channel exists. Hit subscribe so you don't miss the next breakdown. Drop a like if this opened your eyes, and let me know in the comments. Do you think gold makes a comeback, or is the world moving on for good? I read every single one. I'm Marcus Cole. This is Founder Empire, and I'll see you in the next one.